In 2013, Chinese President Xi Jinping unveiled an ambitious plan to reshape the global economic landscape. This plan, known as the Belt and Road Initiative, or BRI, aims to connect China with the rest of the world through a network of infrastructure projects. These projects, encompassing roads, railways, ports, and energy pipelines, are designed to facilitate trade, investment, and cultural exchange. The BRI represents China's ambition to become a global economic powerhouse and exert greater influence on the world stage. But it's not simply about building infrastructure, it is a long-term strategic initiative with profound geopolitical implications. By investing in infrastructure in developing countries, China aims to secure access to new markets and resources. The BRI has been met with a mix of enthusiasm and apprehension from the international community. While some countries see it as an opportunity to boost their economies, others worry about China's growing influence. The BRI is still in its early stages of development, and its ultimate impact remains to be seen. However, it has already begun to transform the geopolitical landscape, particularly in Southeast Asia. This region, with its strategic location and rapidly growing economies, has become a key focus of the BRI. China has poured billions of dollars into Southeast Asian countries, funding projects ranging from high-speed railways to deep-sea ports. The BRI has the potential to bring significant benefits to Southeast Asia, including economic growth, job creation, and improved infrastructure. However, it also raises concerns about debt sustainability, environmental degradation, and Chinese influence. As the BRI continues to evolve, Southeast Asian countries will need to carefully weigh the risks and rewards of their engagement with China. Southeast Asia occupies a strategically vital position in the world. Situated at the crossroads of major shipping lanes connecting the Pacific and Indian Oceans, the region plays a pivotal role in global trade. This strategic importance has not gone unnoticed by China. In fact, Southeast Asia has become a focal point for the BRI, attracting significant Chinese investments. China's interest in Southeast Asia is driven by a number of factors. First, the region is home to some of the world's fastest-growing economies, providing a lucrative market for Chinese goods and services. Second, Southeast Asia is rich in natural resources, such as oil, gas, and minerals, which China needs to fuel its economic growth. Third, strengthening ties with Southeast Asian countries aligns with China's broader geopolitical goals of expanding its influence in the region. The BRI presents both opportunities and challenges for Southeast Asian countries. On the one hand, Chinese investments have the potential to address the region's significant infrastructure gap, which has long been a constraint on economic growth. Improved infrastructure can facilitate trade, reduce transportation costs, and attract foreign investment. Moreover, BRI projects can create jobs and stimulate local economies. On the other hand, Southeast Asian countries are wary of becoming overly reliant on China. There are concerns about the sustainability of debt levels, as some countries struggle to repay the loans taken for BRI projects. Additionally, there are questions about the transparency and environmental impact of these projects. Some critics argue that BRI projects often lack proper environmental assessments and may lead to deforestation, pollution, and other environmental problems. The BRI's impact on Southeast Asia is most visible in the numerous infrastructure projects that are reshaping the region's landscape. These projects span a wide range of sectors, with railways, ports, and energy infrastructure taking center stage. Each of these sectors plays a crucial role in connecting Southeast Asia to China and the rest of the world. Railways are a key component of the BRI, and Southeast Asia has become a prime destination for Chinese railway investments. One flagship project is the China-Laos Railway, a high-speed rail line connecting Kunming in southwest China to Vientiane, the capital of Laos. This railway, completed in late 2021, is expected to boost trade and tourism between the two countries and beyond. Another significant project is the Jakarta-Bandung high-speed railway in Indonesia, which upon completion, will be the first high-speed railway in Southeast Asia. Ports are another area of focus for the BRI in Southeast Asia. China has invested heavily in port development in countries like Malaysia, Indonesia, and Myanmar. These investments aim to enhance trade routes and secure China's access to vital shipping lanes. For example, China's involvement in the expansion of Malaysia's Kuantan port has transformed it into a major transshipment hub, handling a growing volume of cargo traffic. Energy infrastructure is also a key aspect of the BRI in Southeast Asia. China has invested in a range of energy projects, from coal-fired power plants to hydroelectric dams to renewable energy installations. These investments aim to meet the region's growing energy demands and strengthen energy security. However, some of these projects, particularly those involving coal, have faced criticism over their environmental impact. Proponents of the BRI argue that it holds the key to unlocking Southeast Asia's economic potential. They point to the numerous benefits that Chinese investments can bring, including job creation, economic growth, and improved living standards. The influx of capital and expertise from China has the potential to transform the region's economies and lift millions out of poverty. One of the most tangible benefits of the BRI is job creation. BRI projects require a massive workforce, creating employment opportunities for local communities. From construction workers to engineers to service industry personnel, the BRI is generating jobs across a wide range of sectors. This is particularly significant in Southeast Asia, where many countries face high unemployment rates. Beyond job creation, the BRI is also expected to stimulate economic growth in Southeast Asia. Improved infrastructure can facilitate trade, reduce transportation costs, and attract foreign investment, all of which contribute to economic expansion. Moreover, BRI projects can lead to the development of new industries and businesses, further boosting economic activity. The BRI also has the potential to improve the living standards of people in Southeast Asia. Improved infrastructure can provide better access to essential services such as healthcare, education, and sanitation. Moreover, BRI projects can create new economic opportunities, allowing people to earn higher incomes and improve their quality of life. Section 5. Shadows of Doubt. Concerns and criticisms of the BRI. While the BRI holds the promise of economic prosperity, it has also drawn its fair share of criticism. Concerns have been raised about the potential for debt traps, environmental degradation, and increased Chinese influence. These concerns have led some to question the long-term sustainability and benefits of the BRI, particularly for Southeast Asian countries. One of the most pressing concerns is the potential for debt traps. As Chinese loans finance many BRI projects, some Southeast Asian countries have found themselves saddled with significant debt burdens. Critics argue that China could use this debt to exert political and economic leverage over these countries, potentially undermining their sovereignty. Environmental degradation is another major concern. Some BRI projects, particularly those in the energy and infrastructure sectors, have been criticized for their environmental impact. Concerns have been raised about deforestation, habitat loss, pollution, and the potential for social conflict over land and resources. Critics argue that BRI projects often lack adequate environmental safeguards and could exacerbate existing environmental problems. Another concern is the potential for increased Chinese influence in Southeast Asia. As China pours billions of dollars into the region, some observers worry that it is using the BRI to expand its political and economic clout. They point to the fact that many BRI projects are being built by Chinese companies, using Chinese labor and materials, raising concerns about transparency and accountability. Section 6. A strategic shift. China's reduced investment in the BRI. In recent years, there has been a noticeable shift in China's approach to the BRI. After an initial period of aggressive lending and investment, China has started to scale back its BRI commitments. This strategic shift is driven by a confluence of factors, both domestic and international, that have prompted Beijing to reassess its approach to the ambitious initiative. One key factor is China's own economic slowdown. Facing slowing growth and mounting debt at home, China has become more cautious about its overseas lending. The COVID-19 pandemic further exacerbated these economic challenges, leading to a more risk-averse approach to BRI investments. Another factor is the growing criticism of the BRI's debt-driven model. As concerns about debt sustainability and potential debt traps have mounted, China has become more selective in its lending practices. This has led to a decline in the number and scale of new BRI projects being announced, particularly in Southeast Asia. Furthermore, geopolitical considerations have also played a role in China's strategic shift. The BRI has faced pushback from some countries, particularly the United States and its allies, who view it as a tool for Chinese expansionism. This geopolitical rivalry has prompted China to adopt a more cautious approach to the BRI, avoiding projects that could further inflame tensions. Section 7. Navigating the New Reality, Southeast Asia's Response. The slowdown in Chinese BRI investments has presented both challenges and opportunities for Southeast Asian countries. On the one hand, it has created funding gaps for infrastructure projects that are crucial for economic development. On the other hand, it has provided an impetus for these countries to diversify their sources of funding and pursue more sustainable and equitable development models. One notable response has been a greater emphasis on fiscal prudence. Southeast Asian countries have become more cautious about taking on debt for BRI projects, scrutinizing the terms of loans and prioritizing projects that offer clear economic benefits and align with their development priorities. This shift towards fiscal responsibility is essential for preventing future debt crises and ensuring sustainable development. Another key response has been the pursuit of alternative partnerships. Southeast Asian countries have increasingly turned to other countries such as Japan, South Korea, and Australia, as well as multilateral institutions like the World Bank and the Asian Development Bank, to finance infrastructure projects. This diversification of funding sources reduces reliance on China and strengthens their negotiating position. Furthermore, Southeast Asian countries have also been exploring innovative financing mechanisms such as public-private partnerships to attract private sector investment in infrastructure. By leveraging private sector capital and expertise, these countries can bridge the funding gap and reduce their reliance on debt financing. Section 8. Forging new partnerships, seeking alternative avenues. As China recalibrates its BRI investments, Southeast Asian countries have been actively seeking alternative partnerships to meet their infrastructure needs and development aspirations. This diversification strategy involves engaging with a wider range of actors, including traditional donors, regional powers, and private sector investors, to secure funding, expertise, and technology. Japan has emerged as a prominent partner for Southeast Asian countries, offering an alternative model of infrastructure development that emphasizes sustainability, transparency, and high standards. Japan has a long history of investing in the region, and its focus on quality infrastructure and capacity building aligns well with the needs of Southeast Asian countries. The United States, under its Indo-Pacific strategy, has also ramped up its engagement in Southeast Asia, offering an alternative to Chinese investments through initiatives like the Blue Dot Network, which promotes transparent and sustainable infrastructure development. While the U.S. has been slower than China in translating its commitments into concrete projects, its involvement does provide Southeast Asian countries with more options. Regional organizations such as the Association of Southeast Asian Nations, ASEAN, have also been stepping up their efforts to promote regional connectivity and infrastructure development. ASEAN has established its own infrastructure fund and is working to harmonize regulations and standards to facilitate cross-border investments. Section 9. Conclusion. The evolving landscape of global development. The BRI, once hailed as a game-changer for global development, is at a crossroads. China's strategic shift, driven by economic realities, geopolitical considerations, and growing criticism, has led to a more cautious approach to BRI investments, particularly in Southeast Asia. This evolving landscape presents both challenges and opportunities for the region, prompting a reassessment of development strategies and a search for alternative partnerships. While the initial euphoria surrounding the BRI has waned, it remains a significant factor shaping the geopolitical and economic landscape of Southeast Asia. China's footprint in the region is undeniable, and its investments have brought tangible benefits, particularly in terms of infrastructure development. However, the concerns about debt sustainability, transparency, and Chinese influence persist, prompting a more nuanced and pragmatic approach from Southeast Asian countries. The future of the BRI in Southeast Asia and globally will depend on a number of factors, including China's domestic economic situation, the geopolitical rivalry between the US and China, and the ability of Southeast Asian countries to manage their debt levels, diversify their partnerships, and promote sustainable and inclusive development. The BRI, in its initial form, may have run its course, but the quest for infrastructure development and economic integration in Southeast Asia continues, albeit with a greater emphasis on sustainability, transparency, and strategic autonomy.